Hello, everyone.
Hello, everyone. Good afternoon, everyone. Um, let's wait a couple of minutes before starting. But first of all, thank you so much for being here, and we're very excited for this very important and special moment. It's supposed to be more than just the finalists because we've opened the session, as you all know, to everyone who wanted to join. So let's wait a bit so that everyone's here, and then we can start. We can hear a
DJ play.
Okay, I think we can start. So as I was saying, it's such a special day. We should mute the room before starting. Thank you. So as I was saying, it's such a special day and moment for us all, but I think for you as well. We are finally arrived after 7 months at the European final of the Euronext Trading Game. Congratulations to everyone who participated, but of course also to our finalists today. So today we will be hosting the final of the groups. So we had the final of individuals last Wednesday, and it was a great success. And I'm sure this is going to be just as much of a success and an interesting session. A quick background, perhaps, on the initiative and Euronext and where this stands in Euronext's DNA. So the Euronext Trading Game was created 2 years ago, and this was the first edition. And basically, the idea was to give a university hands-on and risk-free experience of financial markets. And of course, this is thanks to our 7 marketplaces in Paris, Milan, Amsterdam, Oslo, Dublin, Brussels, Lisbon. We have Greece that entered in our ecosystem in December, and I'm super sure that Greek students are gonna be part of the game next year, but the data is gonna come in the coming years. But anyways, this is an initiative, but we have loads of initiatives under financial literacy because beyond this simulation and beyond this initiative lies something bigger, a Euronext, which is building the belief of financial literacy as a social imperative and building financial literacy, encouraging critical thinking, and this helps shape the next generation of investors, market participants, but even just people participating in financial markets, which we think is of imperative importance. So this year for the Euronext Trading Game, we had more than 7,200 students from the countries that we just mentioned, the 7 countries that we just mentioned. So of course, mega congratulations to everyone who is going to be presenting today, because that gives a very low chance of, you reached a very important step. I am also super happy to see in my screen the jury in Paris right now. They're all in a room in Paris. We have Roberto, Gianmarco, and Emma, who will be our jury members. And then there's also Jajun, who helped organize all of this. If you quickly want to present yourselves to the finalists so that they get a chance to meet you and know who will be assessing them. I think that would be fantastic.
Do you hear me? Yeah. So my name is Emma. I'm working the derivatives product team at Euronext, and I've been at Euronext for almost 4 years now, and I'm super happy to participate to this challenge.
I'll go next. Hi everyone, I'm Roberto. I'm from Italy, so I grew up in the little town in the north of Italy. I did my studies in Milan, started working at Borsa Italiana, and I spent 5 years there. And then 3 years ago, I moved to Paris, working in the equities team at Euronext. And congrats again for making it to the final. I'm very curious to hear about your strategies and ideas that you had over this 6-7 months.
And then that's me, Gianmarco, always from Italy. I'm in Euronext since almost 6 years now. I'm in the Euronext Market Service team, and that's all. I mean, enjoy. Congratulations for reaching this step. Hope it will be winning the best.
Jajun, also quickly, if you want to.
Hello, I'm Jajun. So if nationality matters, I'm Chinese. But what I want to say really is congratulations. It's really a long program that understands, and 7 months commitment is a huge one, and you're making to the finals. Regardless of the result, you're all winners here today. I'm sure the jewel will be easy on you, but prepare for the questions. And best luck. Thank you.
Great, very wise words, enjoyment, and you are all winners today. So without further ado, we have a video that is going to be more engaging than me going through the finalists today. So if we can quickly share that, and then we can kick off with the pitches. Thank you. Okay, perfect. It's going. Very motivating music. Hope this gives you the right push to start. So we've decided to go in alpha. Actually, first of all, I wanted to thank everyone who helped in making this come to life, from Nextwise to everyone at Euronext, to our jury members, and to everyone who participated, because of course we had more than 7,000 people participating. So this is coming to life only thanks to that. And of course, to the winners that we just saw, we decided to go in alphabetical order from the clubs. So as you know, you will have 5 minutes to present. But I think I'm not sure if everyone is or how we decided to split the presentation. But if everyone is here, I think it'd be nice for the members to present themselves, and then you will have 5 minutes to go through either your slides or your strategy. Then a couple of questions, as you all know, and then yes. So we, in alphabetical order, we have Alpha Investment Fund first from Nova School of Business and Economics in Portugal. Do we have anyone from Alpha Investment Fund?
Yes.
Yes.
Yeah. Okay. Hi, Tobias. If other people are here from your club, super happy for you to do a round of introductions and then kick off the pitch. Thank you.
Yeah, thank you. My name is Tobias. Also, my other group members are here. I think they want to share the presentation in the next couple of seconds.
Yeah, we're all sharing the same mic. So even though the sound will come out from Tobias' computer, we are all here. I think we are
You're all in the same room.
Cameras on. My name is Jorge. I'm from the Nova School of Business and Economics, and well, we're here very excited to participate in this final pitch for the tournament. And yeah, I will share the presentation.
Perfect. Thank you very much. Is it coming?
Can you let me know if I'm sharing it?
No.
1 second.
No.
Not showing.
Okay, 1 second.
It's working.
Yes, now. Yes.
Yeah.
Now, yes.
Okay, perfect. So hello everyone, we are the Alpha Investment Fund. So today we were gonna speak a little bit our investment philosophy and our portfolio construction. So our portfolio was based on 3 main pillars. So we have US equities, European equities, and then hard asset macro hedge to have a downside protection. The idea was to mainly have a low volatility portfolio and search for alpha in the opportunities more in the European side. So we achieved a 5.3 portfolio volatility, 3% return. We have a 0.4 alpha, and overall we had 32 assets that we own on the overall portfolio. So I will let my colleagues continue with the presentation, and I hope you enjoy.
Yeah, thank you very much. Regarding the sector screeners and our holdings scorecard, every position that this fund took is based on two screeners criteria. One is the fundamental filter, where we make sure that each security market cap is above 2.5 billion, and some other metrics as the ROI that should be above like 15%, the debt to equity less than 0.6x, and the price to earning ratio less than 20x in valuation discipline. On the other hand, we were also looking for alpha, so we have an alpha filter from small and medium cap market securities. So for that, we were looking more into the price momentum and also low analyst coverage and re-rating potential. In our ranking, we have like our first and the best performing assets on the offshore and upstream energy, basically energy. So we were looking at the reserve life, capex, well, then we have second place, the Italian ultra luxury, Ferrari, Brunello Cucellini, and then we have a strong. We were bullish on the French industrial capex as well on the French financial insurance. And then with that, we went to the composite fundamental to choose the best one in overall. So that's our composite fundamental score in the bottom of the slide, where you can see how did we calculate our score. So I will pass it to my other friend and in the slide 3.
Yeah, and now talking a little bit more about the our 3 pillars, as already mentioned at the beginning, we decided to stay on the first pillar on the US large cap as main engine of the portfolio, especially to control volatility. And in fact, this pillar contributed to around 75 to 83% of our overall volatility. And this was intentional as we tried to divide by sector that were, as we saw by the overall volatility, more stable, especially during this uncertainty overall in the geopolitical environment. As a second pillar, we tried to find as a satellite the European stocks to mainly try to find some alpha in specific stocks and find some opportunities in Europe, even though we are not going through the best macroeconomic period, but there are still some opportunities. And lastly, to hedge, especially with this uncertainty, we took some positions in gold and bond and silver to find some alpha as well, because they perform very, very well, especially at the beginning of the year. Now they're more stable slash going downwards. But overall, this was our approach. So finding an edge in also commodities and not being exposed just in equity. Now I'll pass the word to my last colleague for the last slide.
Yeah, thanks. So if we look better at the numbers, we can see that the fund peaked at 2.79% since inception. And but the most important thing is that we kept the volatility at 5.3% against a benchmark of 12.5%. And also the beta is 0.40 after repositioning, and the diversification ratio expanded from 1.42 to 2.23, meaning that the portfolio is actively working harder with every position added to the portfolio. But the real test that we did was the crisis scenarios. So we basically ran the portfolio against 13 historical events, and we managed, as you can see in the presentation, we managed to outperform in 12 of them, and including the 2008 financial crisis with 18.1% of outperformance, and the COVID crash with 17.6% of outperformance. And even in the worst case, which is the 2022 war and inflation shock, we outperformed by 7.1 points. And this is basically just not luck, and it is what happens when you size risk consciously, as we did, and edge it structurally. And I will pass the word to the last colleague to show the final results.
So to conclude, why should you allocate to alpha over passive beta or any other peer fund? We divided it in 4 reasons. So the first is our proven downside protection. 13 out of 13 stress scenarios are outperformed, up to 18 percentage points better than the benchmark. The second is our decisive risk management. When the Liberation Day hit in April, we moved cash from 9.5% to 52.2% in 1 week. The portfolio volatility was cut in half, and we captured then 2.1 percentage point out of this recovery. The third is a repeatable process. Every position is screened through a dual layer criteria, graded by Pharma French, Novi Marks, or Jagadish Titman factor research, with a written thesis for each holding. And the fourth reason is our honesty. We have documented every mistake, like the UCTS breach, the bound timing, even the edge gap, each as a corrective action. So the measure of a manager is not whether they have a mistake, it's what they build from them. Thank you.
Great stuff and great finale. The word to our jury now.
Yeah, happy to start. First of all, well, I'm personally impressed by what the outcome of your strategies and also the presentation itself. So well done. Really, it's not easy to summarize 7 months in 5 minutes. You did it super well. One question is so I'm not a portfolio manager myself. From a perspective of portfolio managers, often they need also to take into consideration sustainability into their investment strategies, either because it's mandated by regulations or because the end investors want it. How would you say tune your portfolio based on ESG factors? And did you consider that at some point during the 7 months?
Of course, we were thinking about that. But at the end of the day, we had a strong focus on energy companies based on ESG and quite green, as you, for example, see with Subsea. But we did not decide not to include a company because of that.
Okay. Yeah, it's clear. Thank you.
Oh, yes, I might have a question. I probably missed it. Did you mention a Sharpe ratio for?
I'm not sure it is in the presentation, but we have the performance and the volatility that you could clearly see. we got a performance of around 3% and the volatility of about 5%. So yeah, it's a quite decent Sharpe ratio compared to the benchmark. But I don't have the exact number right now.
No, can calculate.
Yeah.
And what is the most important driver that drive the performance, in your opinion?
I might take it. I think the main driver was during especially what we've seen at the beginning of this year. I think our allocation, especially in some sector like energies and also the allocation towards gold and commodities, helped us to protect us from the downside that we've seen at the beginning of the year. And then we were able to remain more stable than other portfolios that because we were less volatile. So I think the main driver was a good sector allocation and commodity allocation throughout these 6 months of this challenge.
And why did you choose exactly the energy sector then?
I think especially we analyzed also a regime scenario where the economy was moving towards. So looking at the growth of the economies and the inflations, the data were rooting towards a possibility also to move towards a stagflation environment. So we looked into what are the sectors that perform better in these scenarios, and energy was one of them. That's why we decided to go towards that allocation, and also gold, especially in stagflation when bonds are not performing and equity is not performing. We thought was a good pick for our portfolio.
Okay, thank you very much.
I have a question. So I understood that the core of the strategy was based on stocks, right? You chose US stocks, European stocks. What kind of European stocks have you used, like large caps or small and mid caps? Can you
Generally,
elaborate?
everything. We were quite open to
Okay.
that topic.
Okay.
But with a stronger focus, of course, on the small caps, because there we saw more potential.
Okay.
We were trying
Thank you.
to
Okay, perfect. Thank you all. Let's move on to and good luck for the decision. Let's move on to the next group, Bizo Invest Stavanger from Norway.
Sorry, excuse me.
Yeah.
One of our group member has to leave to 5:35.
Okay.
I would like to know if we can do our presentation now.
Okay. Yes. Okay. So
Yes.
Université d'Orléans, no?
Yes.
Okay. So let's you were last, so I think yes. If it's fine with everyone, let's do that so the whole group is there. So
Yes,
the group is
absolutely.
called Université d'Orléans from Université d'Orléans, France. And the floor is yours. Good luck.
Thank you to be there today. So our strategy combines a top-down analysis with a contrarian approach. The goal is to anticipate and exploit market shifts to generate alpha. In October, we create our portfolio in a climate of extreme valuations, driving fears of a tech and AI bubble. To measure this overheating risk, we use two indicators, the VIX and the capture ratio. The VIX to measure market stress, and the capture ratio for measure the market overvaluation, which was reaching alert levels typical of pre-crisis periods. The VIX staying above 20 points for a long time in the last quarter of 2025 showed market nervousness. Technically, VIX above 20 announced scenarios, an imminent crash or a violent sector rotation. But for us, it was a simple deflation of tech multiplies. This pushed us to underweight tech to pivot towards defensive value assets. On its side, the cap chiller helps evaluate if a market is overvalued compared to its historical average of 17 points. Even if crossing the critical threshold of 30 points does not always trigger an immediate crash, historically, it was always preceded strong correction. In October and November 2025, this indicator went way past the danger zone, reaching extreme level between 39 and 41 points, almost touching the absolute record of 44 points from the dot-com bubble. The results between October and February, the Nasdaq stagnates while being highly volatile with a performance of minus 3.52%, while value stocks grew by 17%. This confirmed that the anticipated sector rotation actually happens. During the competition, our stocks peaking in the value and defensive sector bring us a 28% return. Yes.
As part of our top-down approach combined with a defensive value strategy, our geographic allocation was based on PMI indexes to identify growth drivers. In November 2025, Italy, Belgium, and Spain stood out with expanding indexes above 50 that were improving from the previous months. A score above 50 indicates economic expansion, meaning an increase in upcoming investment and these countries, and therefore growth for us to exploit. Validated by other solid macroeconomic fundamentals, for example, GDP growth, inflation, and unemployment. These areas concentrated our investments, especially through stock like NL and ENI. To combine a defensive posture and alpha generation, we overrated certain sectors like energy, because its demand is inelastic, because AI infrastructures will remain highly energy intensive. Even in the event of a tech crash, to approach 2026, we completed our portfolio with utilities and industry, two tangible sectors directly benefiting from the modernization of power grids and relocation policies. Our risk management resulted in neutralizing volatility. Indeed, we selected uncorrelated stocks showing a beta close to 0. We specifically targeted companies that proved that their total resilience during the general market sell-off in April 2025, triggered by Donald Trump's tariff announcement. Finally, true to our contrarian approach, our entry points systematically targeted market dips. Most of our best performing stocks were thus bought during the first week of of November. Yes.
Sorry to interrupt, but you're at 6 minutes. So if you can wrap up, that would be fantastic.
Okay. Strategically exploiting the index drop caused by the historic US shutdown.
So can I continue? You said we were at 6 minutes.
Yeah, so perhaps super quickly, in a couple of seconds, if you can quickly go through it. I think this was
get
quite...
the minutes?
In theory, no. 30 seconds. You have 30 seconds.
Okay. Our defensive value strategy we used proved to be highly relevant. We generated a 44.9% return compared to 7.4% for the Euro Stoxx 50. Our benchmark, which means an alpha of about 38% and an excellent Sharpe ratio of 3.6. These results relies on several drivers: 28% from our value strategy, 4% generated on precious metal during Kevin Rush's nomination, 7.4% captured during the earnings season, and finally 5.3% made in 48 hours right before the end of the competition. This final 5.3% is the direct result of a quick reaction anticipating the ceasefire in Iran. We did an emergency tactical rebalancing, with the market coming down shown by a VIX dropping back to 17 and the catch-up of value stocks being completed. Keeping our protection was no longer justified. We therefore switched to cyclical stocks, which were heavily penalized and highly volatile during the conflict, allowing for this quick gain. If the mandate has continued, our allocation would have kept evolving with new market paradigms. In summary, our management was built in 4 pillars: a top-down approach, a defensive value bias, a contrarian timing, and adaptability. Thank you for your attention, and thank you for the time additional.
Thank you. I think this last slide was quite important. So thank you for being super quick. Yes, any questions the jury may have, please go ahead.
Yeah, I'll start. Again, very different approach compared to the previous team, but equally interesting. Just wanted a bit of clarification from you on. You mentioned at the beginning a bit the focus on contrarian approach, small and mid caps as well. What share in the last policy is more driven by, there is a good 10% of within the performance driver driven by precious metals, and a bit of a pivot towards the end. So it's good to be dynamic, but I also want to get your thoughts on how can you guarantee that your strategy would be performing well in also different macroeconomic conditions. So it worked well with a big volatility and some let's say sector rotation. But if the situation would have been different, do you think your strategy would have worked well? How would you have reacted to that?
I think our strategy is not good for a strategy. It's good for this situation, but for example, last year, if we use the same strategy, we have to face a lot of mistakes, because this strategy is good to defend the portfolio. Sorry.
Yeah.
But if we have a good volatility on the market, if the market go up significantly, we can't do the same performance with our portfolio. So if we have another market, if you are on another situation, I think our strategy at the end of the competition was better if the market go up.
Okay, no, thanks. I mean, it makes sense with what you said at the very beginning. So you started mentioning the VIX index and the fact that companies were probably
we don't have only one strategy. We adapt our strategy on the situation. Last year we have another strategy. It was totally different than this year.
Yeah, exactly. It makes sense. As the VIX index was high, companies were probably overvaluated. It makes sense to build a strategy based on those say inputs. Yeah. Thank you, David. Very clear.
Thank you.
Well, my question is, what's the weight of the first three stocks? What's the weight of them?
Of the first, I don't have, but I think Morel and Prom it's close to 4%.
Okay.
Titan it's close to 6%.
Okay.
Any the same, any 6%.
Okay.
And I have a question around your risk management strategy. Can you elaborate a bit more on what have you done to on the risk management?
And I add that to link the question, because I had the similar question. How did you manage the tail risk?
So the risk management, we don't introduce you all our subjects, but we do a lot of stuff. We have a lot of indicator. We use, for example, VAR Monte Carlo. We calculate a lot of indicator and all day we calculate this indicator and it's our mix management and we do a technical analysis to fix our price to sell and to buy, but it's for the risk management is for sale, so we do this.
Okay. Thank you.
Thank you.
Sorry. Perfect. Thank you so much. It was very interesting, and congratulations on your results. They're quite remarkable. Moving on to Norway, we have the Bizo Invest Stavanger. I'll let you pronounce it well. Is anyone from the club here?
Yes.
Perfect. So you have 5 minutes. The floor is yours. Good luck.
I think one of my teammates is gonna show the presentation.
That works. Are they here with us?
I think, yeah, it's problems with the microphone, so we'll just try to fix that first.
Okay, maybe in the meantime you can present yourself so that we don't we optimize time.
I can start. I'm Clara, I'm 21. I'm of Spanish origin, but I'm studying in Norway, economics. I'm currently in the UK, specializing in finance and data science, and yeah, my friends are in Stavanger.
And how do you pronounce your club?
Bizo Invest Stavanger.
Stavanger. I got it wrong.
No, it was quite good.
Are we ready?
I would suggest you perhaps disconnect the meeting and join again.
Or perhaps we can go on to the next one before, and you guys check the, okay, perfect. Okay, so we have up next LSM Investment Club from Belgium, Leuven School of Management.
Yes, hello.
Are you here with us? Yes, I heard someone's
Yes.
voice. Can't see you yet, but I'm sure you're gonna. Okay, well, good luck to you guys. The floor is yours. You have 5 minutes.
Okay, thank you for your time. So, as you know, during the past few months, the market has been volatile. But despite this context, our investment strategy has been able to stand out. So, our portfolio has gained more than 7,000 euros, which means a performance of 3.6%. So, we're going now to present why our asset allocation, our vision, makes our portfolio ready to dominate the European stage. So let's now talk about our first great pillar, which is the focus on energetic transition and durability. So 17% of our portfolio is allocated to this team because we believe in supporting the creation of a responsible future while still providing solid returns. So in practice, we invested in companies such as Total Energies with a return of more than 46%, Schneider Electric or Air Liquide. We also invested in the Amundi ETF green bonds to provide some stability and diversification to our portfolio. And overall, regarding the governance, we favored companies where the capex, so the long-term investments, directly align with the energetic transition.
So for diversification, sorry, we implemented a strong geographical diversification with a significant allocation in Europe, around 75%. We expect the region to outperform in terms of growth over the coming years, despite the short-term horizon of the competition. The United States represent about 15% and emerging market 10%, mainly through ETF, allowing us to broaden our sector exposure while reducing specific risk. From a sector perspective, our portfolio is exposed to more than 10 sectors. We maintain a tactical overweight in energy to capitalize on current price momentum. At the same time, we maintain a robust portfolio structure through strong sectors such as financial services and chemicals, while ensuring prudent management through segments that are less sensitive to the economical cycle.
No, of course, every portfolio has to have a performance. That's what the clients want. So we included a 12% leverage bucket, which includes stocks that have been leveraged maximum 2 or 3 times big maximum. And it's, of course, to boost the growth of our portfolio. It's, of course, stocks that have high growth for the moment, like Alphabet and Apple. And this is, of course, a calculated risk that is monitored and mitigated by our other position. That's why it doesn't exceed 12%. Also, we have a second level of selection criteria, which is really important, that adds to the other criteria, such as the comparable methods, notably price to earning ratio, debt to equity, and free cash flow. We ensure the financial stability and the health of the company by comparing it to other industry competitors. And of course, it's really important to have good news surrounding the company, new projects, growth outlooks, and of course, as we said, capex that make true of a significant investment. So to conclude, our portfolio strategy revolves around diversification, ESG, EU-oriented stocks, and of course, growth. These are the fundamentals, but of course, these cannot work if we don't check the healthy financial situation, if there's no promising outlooks or investment behind the companies, and for the performance, some bullish trends like we talked about with Alphabet and Apple and other stocks like this. Thank you very much for your attention.
Thank you. Super professional. Even your looks are very professional. So congrats. I mean, I'm not a jury, but I would tend to want to know more on why Total Energies is considered under ESG, but I'll let the word to the jury and ask their questions.
Let's stick to that question. I have others, but yeah, I think it's a fair question on why Total is considered as an ESG company. Sometimes a bit controversial, but happy to hear your thoughts.
Yeah, it might sound a bit weird to put Total Energy in the ESG part, but it's actually because Total Energy is currently one of the major actors in the, like I said, energetic transition, and they plan to be completely carbon neutral by 2050. So they're actively working with the ESG regulations to provide more durable energies to their clients. So that's why they're in the durability part. They're actually
we can add that we wanted to have a European company revolving around energy because in Europe we can ensure that we have a huge criteria of transparency that is imposed by the European Union. So of course we know that there's some greenwashing happening, but we still are confident that Total can improve its situation and transition to a better source of energy.
That's clear. Thank you. Hope it's clear to Victoria as well. Yeah, she's smiling. So I guess yes. Thibaut, at some point you said 75% allocated to Europe because you were expecting it to overperform. Why were you guys expecting Europe to overperform compared to the US or emerging countries?
Yes, because we think that the Europe have underperformed from last 10 years the US market, and because we are, it is a trading game for Euronext, so we want to put some more Europe stocks in our portfolio, and we think that the energy European and the chemicals will be two sectors that will outperform the other continent in the next 5 years.
Thanks. Yeah, go ahead.
I just had that we didn't want to focus too mainly on the US as well due to the uncertainty and the high interest rates there, and also all the context with Iran and the uncertainty linked directly to the US. So that's why we wanted to really provide and highlight the European companies.
Very supportive of that idea. Honestly, also, when we don't speak directly within the stock exchange, we speak mostly to the trading members, meaning banks and brokers rather than asset managers. But they also report what the asset managers' the long-term decisions are. And it's probably the first year that there is a proper interest in this Europe versus US shift. A bit of concerns about the US tech bubble, if it's a bubble. So yeah, I'm glad that we're proudly European and supporting. Yeah, sorry. Gianmarco,
yes, I've seen that the major weight, the sector weight was the energy. Is there a particular reason why you choose a priori energy?
Regarding the energy sector, we don't really have a specific reason other than those stocks have provided huge growth. For instance, Total Energy used to be a smaller position in our portfolio, but he gained more than 46%. That's why it's now such a big position. But we still wanted to have diversification, ESG and euro-oriented. That's why and especially growth. That's why for such companies, it happened to be now so big. But at the beginning, our portfolio, it wasn't really the case. That we intend to make some to rebalance the portfolio after the Iran war, of course.
Okay.
I do have a question around your portfolio construction. I've seen that you haven't used commodities and neither bonds. for hedging. So it's why that?
We did use commodities through, like for instance, I'm on the ETF, but it's an index regarding green bonds. So all the bonds that are directly linked to durable projects. But it's an ETF, but it's actually corresponding to bonds directly, which are durable. So we have a part of bonds in our portfolio for the stability and the diversification.
And for commodities, is there like a reason why you haven't used commodities in your portfolio?
We used 3.7%, I think, of Bitcoin. But we believe it's a refuge value, and yeah, I don't know if Alex or Thibaut can add something on this.
Of course, we didn't add that much commodities because we weren't really focused on it for the moment, because we were quite interested in European stocks. As you can see, that we have 75%, but we just didn't feel the need of commodities in our portfolio. Of course, Alpha said that we have some Bitcoin that we consider commodities that could just of course boost a little bit the portfolio and have some hedging.
Okay, very clear. Thank you.
Perfect. Thank you so much. Going back to thank you and congrats, guys. Going back to let's say if I pronounce it well now, Viso Invest Avanger. Are your technicalities okay?
Let's see. Do you hear me?
Yeah.
There we go. Finally. Yeah. Now we're good to go. Sorry about that.
Great.
Okay. Where do I go to? One moment. Let's see. Is this working or not? Oh, okay.
Yep.
We are good to go. Okay, let me just one moment. Oh, sorry, yes, I'm terribly sorry, that's the wrong presentation. Just one moment, please. We have made some adjustments. There's not going to be the stop presenting. Terribly sorry about that. And then it should be window and there. Oh, there we go. Sorry about that. Okay. So 6 months ago, we were given 200,000 euros and a blank book. Today, that book is worth 229,000 euros, yielding a return of around 13% with a beta of 0.9, meaning we delivered that return with less volatility than the market. That is not luck. It is a result of our thesis and framework. Oh, are we? Okay. My slides are not responding. Hold on, there we go. So there we are. So sorry about that. Okay. So we don't just pick stocks. We focus on structural stories that unfold over years, not weeks, and invest in great businesses that are best positioned to benefit from these stories. Today, we are exposed to 4 such stories. First, the energy transition. Europe's grid build-out and its scramble for critical minerals are not a one-year event. They are a decade-long story. Second, European defense. NATO's 2% commitment is no longer a political theater. It is translating into multi-year order books for European defense companies. We are selective here, but our conviction is long-term. Third, the shipping cycle. We find it attractive due to limited build-out and geopolitical developments that are redrawing global trade routes and supporting structurally higher freight rates. And fourth, raw materials. The supply constraint inputs that underpin our thesis. You cannot have an energy transition without aluminium, and you cannot rearm Europe without steel. This is how our conviction translates into portfolio construction. 29 positions across 8 sectors, with the concentration where we see the strongest opportunities. And when that framework is applied, it shows up directly in performance. So the performance you see here is not just a point in time, it's a result of a process applied consistently. Performance is what you see. Process is what makes it repeatable. 4 rules governed every trade we made. 1, position limits, and no single bets defines a portfolio. 2, stop loss discipline. Every short position carried a 10% trailing stop loss. And 3, profit taking. Tactical positions were closed at plus 20% returns, and we let our conviction names run, but never fell in love with any trade. And 4, active loss control. Positions were quickly sold off if our thesis turned out to be wrong. Our proposition is simple. We delivered market-beating returns while taking on less risk. We are looking to scale a process that has already translated macro conviction into disciplined, risk-adjusted returns. Thank you. We're happy to take your questions. Cool. There we go.
Well done. Really like the storytelling behind the 6-7 months of good let's say drivers behind, in particular the mix between the shipping plus commodities plus European defense, which are really timely choices. If you were to pick one mistake you've done, which would it be? What would you have done differently?
Well, I can come with 2 actually. That's under both the long and short term. Short term, we tried using some leveraged short-term bets in Palantir Technologies to exploit the market rebound in November, December. Sadly, that turned against us. The position was quickly sold off at its stop loss, but yeah, any lessons taken from that is don't try to time the market. It usually doesn't turn out well, even when you have best intentions. Secondly, we had one long-term investment that didn't turn out as we hoped. It was a company called Bouvet. It's an IT consulting firm, and this company got hit pretty hard by the recent Anthropic model that came out that hit the whole SaaS sector pretty hard. So even though maybe our long-term conviction is still there, the short-term price movement made us have to sell the position to maintain performance.
Okay, thank you. And yeah, sorry.
Oh, sorry. If I might add something, I'd just say that we also have many positions, like 29 positions for 200K can be really not meaningful at all. So sometimes some positions like Morel et Prom that did really well didn't really mean that much because it was pretty tiny. So it didn't really have such a big effect as we expected. Yeah.
Okay, now it's clear. And on the stop loss and profit taking elements, any regret on the profit taking, or it's just discipline and
it's just discipline. I mean, we have the systematic approach, and when it comes to our perspective, on short-term position, we have to have a system that we just follow rigorously, regardless of what we think.
Makes absolutely sense. Yeah. Okay.
I have another question, because you mentioned that you did long and short positions. what's the relation between them? Meaning, what's the ratio between them, especially the win ratio? What has the higher win ratio, the short position or the long position?
Long by far.
Okay.
Short term, we're mainly our main focus is long term equity investors with a value minded mindset. Short term, we're basically there to be able to exploit any sort of short term movements in the market to gain a little bit extra return.
Okay. What's the win ratio for the short term positions?
Win ratio is around 0.8.
Okay.
So acceptable, but could always be better.
Of course, but I mean, it's more the risk man. It's not your core investment strategy, of course. But what I had another question, but I forgot.
Well, we'll still here if you come back to you.
If I might add something as well, I think it's also because on the short-term investments, we had sometimes 5% leverage, and that was dangerous too. That's why we didn't have such good results from that. Yeah.
You mean that you use leveraged positions? Did I understand well?
Yeah,
on
5%.
on some
yeah.
short terms.
5 times, yeah. 5 times leverage.
No, that was the limit. We didn't actually apply.
Yeah, that was the limit.
Using which kind of instruments?
That was mostly ETFs or structured products you had available on your site, like the one the Palantir bet talked about. That was a leverage 3x leverage bet.
Okay.
That was actually my question about what other asset classes you have used apart from stocks. So you said it's ETFs, structured products.
I mean, primarily we are stock pickers and individual equity investors. So that was our main focus. We used like ETFs, market measuring ETFs for the short term when we saw some opportunities. Sadly, not all of them went well, as you mentioned. And we also had one bit tactical position in silver commodities that wasn't,
Okay. Thank you.
Excellent.
Great. Thank you all and congratulations. Let's move to Italy now. Novacore Club from University of Padua. Are you here with us?
Good afternoon, everyone.
Hello.
I'm Elena Ponzi, and I will share with you our presentation. Today, I'm here with my team, Tommaso Piotto, Michela Cicciari, Riccardo Ferrari, Enrico Paciaroni, and Pietro Casotto. I'm here to represent the Novacore investment team from the University of Padua. Together with my colleagues, we are excited to present our approach for the Euronext NextWise Challenge. Since 2020, the world has faced endless shock, a global COVID-19 pandemic, the invasion of Ukraine leading to energy crisis and double-digit inflation, and the April 2025 US debt ceiling crisis. Now, in early 2026, persistent strategic conflicts have made the global fragmentation the new reality. We simply do not know when or where the next black swan will appear. Because of this, markets are increasingly complex and volatile. In such an environment, active trading becomes inefficient and risky. This is why we are here to offer a solution. We designed a portfolio that performs not by predicting the market, but by withstanding it. To achieve this, we developed Novacore, a strategy built first on a strong, resilient core, which is then perfectly balanced with Nova, our target innovation exposure. To show you how exactly this structure drives our result, I will now pass it over to my colleague, Michela.
Thank you, Helena. So, as we established in our investment thesis, resilience matters more than prediction. So we made a clear choice. We are willing to limit some upside in order to better protect the downside. But how did we implement this? We adopt a barbell-inspired strategy by Nassim Nicholas Taleb, structured in two parts. On one side, we have our Nova layer. This is where we target innovation and growth through assets that deliver strong performance but come with higher volatility, like ASML in tech or Valorec in energy. On the other side, we have our core. This is the foundation of the portfolio, built with sectors like utilities or bond-related investments, and this provides stable and defensive contributions. These are robust assets like Orange or S&P Industrial. So the logic is simple. The core stabilizes the portfolio. The Nova layer drives performance. Now, the same logic also drives our geographic allocation. Today's environment is clearly unstable. The US is facing fiscal pressure and political uncertainty, which create short-term volatility. At the same time, we are in a context of global fragmentation with ongoing conflicts and persistent US-China rivalry. In this scenario, we made a choice. We anchor the portfolio in Europe and the UK, which accounts for about 52% of our exposure. In fact, despite its challenges, Europe offers a more balanced risk profile with lower political volatility and clearer regulation. We then complement this core with a consistent growth based on around 25% exposure to the US to capture the long-term growth and selective exposure to emerging markets. So each region plays a precise role. Finally, everything comes together as resilience by design, a portfolio built to hold up in difficult conditions, adapt to change, and keep growing over time. And this design is clearly reflected in our risk profile. We achieve a beta of 0.80, meaning controlled exposure to the market. Our total ex-ante volatility is 10.3%, which is lower than the next-wise constructed benchmark. Our Monte Carlo VaR is 8.2%, again below the benchmark. This structure has already delivered an 8.68% return since inception. The portfolio composition that results from this strategy is a combination of mainly equities and ETFs. We add then a 6% allocation to specific commodities, which acts as a shock absorber in periods of market stress, and we maintain about 11% in cash as a tactical buffer, preserving flexibility and avoiding forced selling. So, to sum up, our core stabilizes, our Nova layer drives growth, our commodities protect, and our cash keeps us flexible. Nova Core is not about predicting the unpredictable. It's about protecting capital today while positioning for growth tomorrow. Thank you, and I now leave the word for the Q&A to the club's president, Tommaso Piotto.
Thank you, Michela. Good evening to everyone.
Congrats, really good presentation. The questions to the jury.
Yep. Thank you. Thanks a lot for the presentation. Really like the references to Taleb and Black Swan, as I did my master thesis on his findings. Super fascinating. Few questions. First one, as part of the Nova side of things, you mentioned ASML. Why the stock being one of the largest stocks in Europe? Why do you think it's part of the Nova pillar and not the core pillar?
Well, ASML is also the largest position in our portfolio, with a 3.7% on total portfolio. We believe in ASML for tactical reason because they are a monopolist. And also for the vision of our portfolio, it is because it is one of the main European firms who are on technological sectors.
Okay, that's clear. And at some point, I think it was Elena mentioned emerging markets. Which ones? So can you elaborate a bit more on the emerging markets that you picked and why specifically? those ones?
Yes, we invest in emerging markets mainly through ETF, since we are splitted in three divisions between for our self-organization between ETFs, single stocks, and commodities. I will leave the word to Michela or Elena if they want to answer.
Yes, I just confirm what actually you said, that we mainly invest in ETFs, so they are large groups of emerging markets with a very low exposition to specific emerging markets, because of course they drive growth, but because they are too specific and it's quite risky, to just be exposed in one single market. So we just prefer to be wide in terms of ETFs and with we could say, very minimal exposure to specific ones. So yeah, we just remain broad.
Okay, thank you, Michela.
Yes, I had a question, but I guess you answered it mostly. It was on the asset class composition. It's very interesting. You chose ETF at 53% of your portfolio. Why have you made that choice instead of equities, for instance, as other groups has done?
Well, ETFs here refers to all ETFs, so bond ETF, equity ETFs. We have made this choice because we are long-term oriented. And on long term, we prefer to be positioned for growth through stocks, because on the long run, stocks have outperformed any other asset class.
Okay, thank you.
Thank you.
And why? I understand the long-term view, but as you knew in advance, would have been a 7-month challenge. Did you consider at any point maybe a shorter term view just for being more cynical and getting to the end of the challenge?
Yes, thank you for the question. In fact, was not so easy to conciliate this long-term oriented view with this 6-month period challenge. But I think when we begin to operate, we found that everyone was looking at US markets. And here we found more opportunities on the European markets and also to emergings. So we said, okay, maybe this can go bad since it is 6 months, is not too much, but we want to position first on undervalued assets like the European market. So we also picked stock based on fundamentals on one side and also on technical analysis. So yes, we do not made any speculative behavior. We decided the composition on the first weeks, and then we made not too much changes in our composition. Also in the war with Iran, nowadays we didn't sell or buy oil, for example, because we are not a fund that want to act speculatively. And also because a speculative behavior is costly. And we want to provide a fund that has lower costs.
It's very clear and a good balance between the long-term view and the short-term challenge. Thanks a lot.
Great. Thank you, and thank you for your questions, Roberto. Moving, Emma, if you don't have any questions, I don't know. I thought you were, no, perfect. Congrats to the Italians. Moving on to last but not least, UGSMF Industrials from University of Galway in Ireland. Interesting name. Let's see if it reflects your strategy.
No, it is just short for the college's name.
Okay. Well, then, Jamie, good luck. The floor is yours.
Good afternoon, everyone. My name is Jamie Cantlon. On behalf of the University of Galway Student Managed Fund Industrial Sectors, we welcome you to our pitch for the EuroWise NextWise competition. Today, unfortunately, it's just going to be me pitching as we are in the middle of our final examinations and some of the team members couldn't make it. Nevertheless, our team is from the University of Galway in Ireland, and over the course of this competition, we've built and managed a diversified investment portfolio with one clear goal: long-term sustainable growth. As you can see on the slide, our portfolio scored 54.5 points in the competition game, which we're really proud of, and I'll break down exactly how we got there over the course of this presentation. So starting off with what was our investment thesis. From the start, we wanted to build a portfolio that was resilient, one that could handle market ups as well as market downs and still grow over the long term. Our thesis was straightforward: blend European blue chip stocks with global ETFs and real assets like gold, guided by the mix of value investing, thematic growth, and ESG principles. In terms of investment style, we took a primarily top-down approach, starting with the big picture first. We looked at the major macro trends: the global energy transition, and the rising commodity demand and emerging market growth. We then selected stocks and ETFs that we believed would benefit from these themes. That's how we landed on Total Energies, LNG gold mining, WT physical gold, and our emerging markets ETF. We complemented that with a couple of bottom-up conviction picks, such as Kerry Group and Sanofi, which we liked the company's fundamentals and specifically felt that they were undervalued. For risk management, we spread across 6 different sectors and multiple geographies: France, Ireland, the UK, the US, and emerging markets. Our gold and ETF positions acted as stabilizers, cushioning us against volatility in the individual equities. On the ESG side, we made conscious effort to include companies with strong sustainability credentials. Total Energies and Energy were both actively transitioning towards a cleaner energy, and LNG gold mining applies very strong ESG screens across its holdings. We also checked that they all had compliance with the UCTIS across the portfolio. So this slide shows our full portfolio of our 9 holdings at close. Our star performer was clearly Total Energies, which was up 45.5%, giving us a gain of over 4,500 of our position. This was a conviction play on the energy sector. We believe that even with the push towards renewables, traditional energy majors with strong balance sheets and traditional strategies would hold up well, and that proved right. Just touching on that as well, we wanted to really include ESG, and we, as one of the other teams earlier says, and we found out when we were looking into Total Energies that it is trying to go carbon neutral by 2050. I suppose moving on to another one, our SPDR emerging markets was our biggest holding by capital, with nearly 41,000, and it returned over 16%. We like the long-term growth story in emerging economies, especially with global interest rates planning to more stabilize. The physical gold was up about 14%, which was another conviction call. With global uncertainty, especially in the US, and inflation concerns, gold made sense as both a store of value and a hedge. Vinci, the French infrastructure company, gained about 9.5%, really showing that it was a steady defensive pick that paid off. Now, we have to be honest about Kerry Group. It's down 18%, which is our biggest underperformer. Kerry Group is strong, an Irish strong food ingredients company, but it has had a tough period. Headwinds from consumer spending slowdowns and margin pressure on its division. We held a long-term recovery play. We genuinely believe that the fundamentals are sound and they will come back, but it hasn't yet happened yet, clearly, and that has been the main drag on the portfolio currently. It's been a real learning curve for us, and it's taught us that even high-quality performing companies can face short-term headwinds, and the patience is key in long-term investing. The chart on this slide shows the profit and loss across the 9 holdings at a quick glance. You can clearly see where the value of was created and where we faced challenges. In terms of how we built the portfolio on asset allocation, we struck a balance between individual equities and ETFs. This gave us a diversified market exposure without over-concentrating in one area. While the equities were chosen through proper scrutiny selection, we also looked at the financial metrics, sector trends, and macroeconomic factors for each one at that time. For weightings, we took a conviction-weighted approach. Our highest conviction picks like Total Energies and the emerging markets got larger allocations, while more speculative and recovery plays got smaller positions. On performance evaluation, our growth performance score of just shy of 35 percentage points was the biggest contributor to our overall 54.5 points on the app. The risk-adjusted score of 6.5 reflected that while we had some losses, we didn't take reckless risks. Our sector diversification score of 6.5 showed that we spread the exposure well across different industries. So just to wrap it up, both the University of Galway Student Managed Fund industrial sector built a portfolio anchored in clear thesis, executed through structured scrutiny selection and diversified across sectors and geographies. But we had some really big strong wins, such as Total Energies up over 45%, gold up 14%, and our ETF position performing very well. We faced a challenge with Kerry Group, but we did see that as an important long-term investment requires conviction and patience. But if we were to start it again, we'd probably set clear stop loss or review triggers for individual equities. So this competition has been a great learning curve for all of us as part of a team. So overall, we're proud of our 54.5 score. And most importantly, we've learned an enormous amount about how markets work, how to evaluate risk, and how to make decisions under uncertainty. So I thank you for listening and I welcome any questions.
Thank you, Jamie. Very efficient for sure, with a few positions still achieving very, very good returns. I mean, a cynical question. Do you think Total was luck? If it wasn't luck, why it was the top performer and why did Total was chosen and allowed you to, you and the team to reach the final?
Yeah, I suppose I wouldn't say it's luck. I'd say if I was to take that question and put it into why the Total Energies do so well, I suppose they benefit from a combination of strong energy demand, high oil and gas prices, positive market sentiment around the energy majors with credible transition strategies. We bought it just shy of 53 euros. I think it was about 52.93 when we bought it. It's now trading at 77. So I think it was more of a case that the thesis playing out well and that the top-down approach of looking at what was happening in the market through the macro sides more so than look on certain other stocks.
Very clear, thanks. And question more on the timing of each investment. If you can elaborate a bit more on, for instance, the entry timing you had on Total or the emerging markets, what drove it? Why did you decide to enter at that specific point in time? Or exit at maybe other positions that you don't have?
Yeah, it's another great question, but I suppose it comes back to our strategy. Obviously, this competition is kind of more short term, as you had said previously. It's only about a 7-month competition, but we were kind of focused on long term growth. I suppose that wasn't just so we wanted long term. It was because obviously we're in final year and we're involved in many other projects, and we really wanted to make sure that it wasn't going to take up a massive amount of our time in comparison to our final year studies. So we chose the long term growth strategy for that, as well as we're partnered with the University Student Managed Fund, which manages real capital for the university. And we wanted to make sure that these picks were very selective, as they're going to continue in the fund for another year or two to come before being reviewed, unless there is something detrimental. So I suppose that's why we chose the long-term strategy, and that's why we stuck with the entry points at certain times, is where we looked at our top-down approach again and seen that obviously whatever was happening in the US at a certain time, did we think that the oil and gas was going to go up? And that's why we kind of reflected on Total Energies, because we believe this kind of conflict in the Middle East may arise, and it kind of paid off.
Very clear, and it's very interesting that there is also a proper university fund, so well done for that.
Yeah.
I have a couple of questions on the metrics that you showed. First of all, if the return is gross from the US dollar performance. I mean, there's a huge component of US dollar in your portfolio, I guess, between gold, mining, I believe also the Spider emerging market is denominated in US. So if it's gross or not, and if you consider to hedge the US dollar against the euro.
Yeah, obviously with the massive uncertainty around the US dollar as well as the Japanese yen throughout this year really got us thinking on that particular point about how we were going to tackle this FX currency. That's kind of why we decided to dip a little bit closer into the EU market, as we wanted to maintain euros as well as maintain a little bit of cash, as we didn't spend all of the cash, just in case any stock did go south. I suppose just on the hedging, we were hoping to set up a swap eventually with another student managed fund over in the US to try swap that FX currency risk with their portfolio. As I mentioned earlier, as this portfolio has real money in it, and we wanted to kind of cover it off through swaps.
Okay. And have you calculated a diversification ratio by any chance?
My colleague Jimmy, he's currently leading the team. He had done a lot of the calculations, but he's currently in the exam and didn't get to pass over the diversification ratio. But I know a few of the ratios he had passed on. The beta of the portfolio was about 0.82, and the Sharpe ratio was about 2.13, I think. But for the diversification off the top of my head, I can't give you an answer, but I'd be happy to pass it on after, no problem.
Thank you very much. Very clear.
And last question for me, why have you chosen the ETF on emerging markets?
Yeah, it's quite an interesting one. We kind of spotted that there was a bit of value in the emerging markets that would more so, we were looking at a lot of the PE ratios, and obviously in the US market, there was a lot more around $28 to 1 in the PE ratios. And in the emerging markets, it was a lot less. So that's kind of what drove us there. We also wanted to spread a lot of the risk, geological risk. I wanted to not just stay in the EU as well as the US with all the war and stuff that is going on at the minute. We wanted to make sure that we were well diversified that way. So that's why we kind of picked the ETF that was with emerging markets.
Okay, thank you.
Great, thank you, Jamie. Well, we've reached the end to the pitches. Congrats to you all. They were all super interesting and quite remarkable. So thank you. We will now take 10 minutes for the jury to discuss in private and come up with the top 3 winners of this grand finale. So let's all reconvene at 6:40 and we'll go from there. Thank you.
Okay.
And both. So you need to add it on Monday. And what?
Hello, everyone. They're gonna take a bit more time. They're coming back to you in 5 minutes max. So I'd like to take this opportunity to greet you all. I'm Roxana, co-founder of NextWise, and I want to warmly congratulate each of you on your participation. I hope you enjoyed the challenge. Well done to all of you. And let's wait the final winners here. Apologies to everyone. We're taking a bit longer than foreseen. It's a very hard decision, so the jury is going to join us as soon as possible. The suspense is killing us. Seems like it's a difficult decision here. Yeah, it was. I heard a bit of the conversation. It was quite hard.
Yeah, we're back. Can you hear us?
Here you are. It was a hard decision. to come. But yeah, tell us what you think.
So, hi everyone. It was really a tough decisions, and we took our time, even more than we expected. And so, we're gonna announce the top 3 winners from the 3rd place to the 1st place. And of course, from our jury, they're gonna give you one last comment from each team. And for the all of the team, if you're curious about your performance and to further request your comments, of course, you can send it to the organization team, and then we will get back to you later. But with no further ado and jumps on, we would like to announce the 3rd place. I leave the floor to Gianmarco.
So the 3rd place goes to Ireland. And very good job. Trust me, it was a very tough decision. However, we found a very good point from you that you diversified using ETF as well, to highly diversify your portfolio, and really appreciated the USD hedge with the swaps. However, probably the return was really skewed on very one stock, which if I remember well was Total Energies, but otherwise was very good. Also the presentation. So good job.
Thank you. Thanks a million. Thank you.
Congratulations. And you're the one person carrying the team. I know that your teammates in the exam today, you cannot participate, but thank you so much for taking the role. Congratulations to you. And now we are going to the 2nd place. I'll leave the floor to Emma.
The 2nd place goes to Norway. So congratulations. It was a difficult decision actually, because you were super good. The presentation was extremely interesting. You answered very quickly to all the questions, so you knew very well your topic. But I would say the only negative comment I could give here is the fact that you were the only one speaking. But well, it's like this. So, but congratulations.
Thank you.
Thank you.
Thank you so much. And then you overcome the technical issues at the beginning, which always happen when you're actually in a real world presentation. So that's the good practice for you as well. And it was the result was so close to the 1st place that we almost got into the fight. But I'm glad that eventually we come to a decision at peace with the jury. And now I leave the floor to Roberto to announce the 1st place.
So for the 1st place, we liked everything. So when we were wondering which were the little suggestions or mistakes we identified, we didn't find anyone. I think it was the team that presented with the quantitative honesty its strategy very clearly. Also backtesting with all the previous 12, 13 crises. And it was the 1st team presenting at the beginning. So congrats to Portugal for winning the challenge. It's not easy to be the 1st one presenting. So ice breaking, and also ultimately the winning team. I see you're smiling. So maybe over to you for some comments on the overall challenge, what you liked, and again. First of all, congrats to everyone. If we spent 20 minutes and not only 5, it was because it was difficult to identify top 3 and difficult to identify the winner, but it's a challenge. There's a winner. So yes, over to Portugal for smiles and comments.
Yeah, we're very happy to hear that. We're all in the same room, so we are looking at each other. Who's going to be the 1st, because it was so tight between each other. There were like some representations, and for
Emotion.
So it's good. Unfortunately, we lost our winners.
Okay, so I can speak for us because I'm not with them in the room. So yeah, we are very grateful to win this. It was a very tough challenge during like almost 7 months, and with very great teams inside Portugal and between Europes. And he came back, so you can continue, Jorge.
Yeah, and as I was saying, it really shows how we can work together, and we knew how to.
How to?
Well, it's okay.
In the first place.
We have
So I'm very thankful
limited
for
time.
by you in your next team. Okay, so I will.
Thank you.
I will. If any of my friends want to speak, or if that's it, thank you very much again.
Thank you.
Well done, because it was really, we liked a lot the fact that everyone within the team spoke, was very well prepared in a dynamic way. The Q&A was handled very, very well. So sometimes we look a bit less at the return itself. It was more the actual team effort. There was present a bit everywhere. Spending also a few words on Italy was really hard for an Italian not to put in the top 3, even though the presentation was super clear. The name itself, Novencore, we liked it a lot. This innovation and resiliency pillars together. France, also hard not to put you there, as is the country which is hosting and welcoming us. The fact that you were very transparent in saying our strategy wouldn't work in a different environment. We looked at the environment, very volatile, overvalued companies. Our strategy works. So straight to the point. And also for the British team, I love we support Europe philosophy. We should that more. We should tell the asset managers to do that more. So hopefully your voice will be heard also from.
So we can
from
bring
the
volume
traders.
to Europe
Exactly.
as well.
But again, honestly impressed by everyone. Congrats Portugal as a winning team, but congrats to everyone else. We don't disappear. We have hopefully our contacts, so stay in touch for anything. And good luck for your not only trading interest, but in general for career, studies, whatever you're doing.
Super.
Thank you, Roberto. And last but not least, of course, Victoria, feel free to wrap up. I just want to quickly say congratulations again for everyone here, and of course our top 3 winners. Additionally, as Roberto said, that this journey doesn't end just by the end of this trading games. You're welcome to connect with our mentor or the jury on LinkedIn, and then reach out. At the same time, we will reach out to you again to ask you for some feedback and some interviews of how your feelings and what's your key takeaway from these competitions. We're happy to feature you again on Euronext social media accounts, so take the chances. Feel free to write back to us. We're really excited to hear from you and to improve these editions for the next round. Riti, maybe you can also announce the winning team their prize, even though they know already.
Exactly. I wanted to get to this because perhaps we should have. So we've announced the top 3, but of course, as you all know, all the winners have received, and please let us know also if your feedback on that. But all winners have received a training on financial markets. The top winner, whilst we decided to go top 3 so that third and all clubs in the podium would get the chance to, if you want to communicate on this, and of course if you need a certificate for future endeavors, we're super happy to give that to you. But the top winner is the only one to get to spend the day with the CEO. So in this case, you're at Nova Business School, so in Lisbon, correct? And you will be super happy to host you in our Euronext Lisbon offices with Isabelle Usha, which is our Lisbon CEO. We will be in touch soon with all the organizational details. And yes, I hope you will enjoy the day and have a glimpse of a day at Euronext. But in general, this is just the cherry on the cake. I hope you all learned in this challenge and also in pitching to investors. And I'm sure that if we do see you next year, you can implement some improvements. And I really do hope that for all the students that we're going to be there will be still students next year, to see you again. And yes, in the meantime, enjoy, and I hope your exams go well. And I think, well, thank you, of course, to the jury. It was super entertaining. And your insights, I'm sure, are going to be cherished by everyone here. And I'll end it here. It's 7. Let's all enjoy our evening. And thank you all so much.
Thank you. Thanks.
Ciao, 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 ciao.
Thank you.
Thank
Well
you
done,
very much.
everyone.
See you. Have a good day.
Thank you. Bye.